here to introduce Jason and Melanie, if you haven't met them before. So Jason Kwiatkowski is a founding partner and the president at Valuation Support Partners Limited, a professional services firm specializing in providing the business and legal communities with business valuation, litigation support, and exit planning advisory services. Jason is an independent financial neutral and has completed numerous business valuation and expert reports, including income assessments for various purposes. Jason has testified before the Ontario Superior Court of Justice as an expert witness in business valuation and damages quantification. Jason has authored many articles and spoken before various professionals and business groups. Next, we have Melanie. Melanie is the founder of KLX Partners Incorporated and began professional practice in 1985 at a large international accounting firm. After moving from the audit group into the financial advisory service group at the large international accounting firms, she developed expertise in various areas, including valuation, dispute analysis and resolution, forensic accounting, succession planning, and transaction support. Her clients include a variety of private and public companies of various sizes and across many industries. Melanie placed second in Canada on the CBV Institute, CICBV, membership qualification examination, and she founded KLX in 1996. So welcome to you both. And we have Michelle returning back here to moderate the discussion. And I'll just quickly go over the agenda, what you can expect to learn over the next hour. So Melanie and Jason will be discussing CBV's role as financial expert in matrimonial matters, discussion of the CICBV and the professional standards, types of report mandates for the CBV, types of CBV reports, the process, usefulness, appropriateness, and potential cost. And lastly, we have joint retainers with CBVs, the pros and cons. And as always, we'll try and reserve as much time as we can for audience Q&A as it comes in. So on that note, I will let you take it away, Michelle, if you have any opening comments, and then pass things over to Melanie and Jason.
Thank you so much. No, Jason, you missed it. I was just saying thank you so much for being here today. I'm excited. I'm looking forward to learning from you. You'll see me taking my notes. So why don't we get started with a poll, because we love our polls here at RIA. So our first poll is, what experience do you have with CBVs? A, no experience. B, some experience. C, great experience. D, what is a CBV? And E, other. So why don't we actually start with that? What is a CBV? Who wants to take that one?
Sure, I'll take that one. So CBV just stands for Chartered Business Valuator, and it's typically the people that get their CBVs have gone through another program. A lot of them are CPAs, CAs, but doesn't have to be, but they often have another designation, and they've generally specialized and had a certain amount of years or hours of experience. And they also take a bunch of courses and then have to write a final exam, which coincidentally was just yesterday for the 2024 CBV hopefuls.
Wonderful. Well, good luck to everyone who wrote the exam today. All right, let's see the results of our poll. Well, it's just taking a minute. Oh, there we go. So we have 46% have some experience. I'm also in that category. I've had some experience, but not a ton. 11% great experience, 32% is no experience, and 11% is what is a CBV. So I'm so glad we did that question first. So why don't we jump right into the next topic, which is the discussion of a CBV's role as a financial expert in matrimonial matters. And I think, Melanie, can I pick on you to do that one?
Sure, pick on me anytime.
So you're going to regret that.
Yeah, exactly. Well, and in the spirit of collaborativeness,
yes.
if that's the right word, Jason, I'm going to invite Jason to jump in and add things, correct me, and talk about his experience in this too. But there's a lot of different ways that CBVs can get involved. And we like to stick, of course, with the financial side. So there's the typical, on the equalization, the property side, the valuation of things. That may be a business interest, whether it's a somebody owns 100% of a company, they own a small part of a company, they have a joint venture interest, a partnership interest, a sole proprietorship interest, so some business interest. But it can also extend to things like more complicated issue, things like stock options or tax liabilities, contingent or otherwise. So that's sort of the property side. We'll also get involved in the income side if there's either child or spousal issue, and how much is that person making pursuant to the guidelines and other considerations. We may also get involved in things that kind of buttress either the property or the income piece, which could be tracing analysis. So, they say that there are these business interests, but maybe there's other stuff, that other bank accounts or other things that is not being or there's a concern they're not being disclosed, or inheritances. Also can be for things like supporting the income analysis. So on the tax return is this, we see this per the financial statements, but there's some concerns that maybe there are other assets or other sources of income that aren't being disclosed. So we might get into lifestyle or other net worth type of analyses. Jason, did I miss anything?
No, I think that's a good summary. I mean, the only thing I would add for the sort of kickoff intro topic is that just to keep in mind, the CBV is a specialty role in matrimonial matters, as opposed to, there are certified divorce financial analysts who tend to get involved in all different types of financial aspects of a separation. You really only bring a CBV in to the situation when there's a business and the business needs to be valued, or like Melanie said, stock options and that type of thing, or on the income side when there's a business and you need an income assessment for support purposes.
Excellent. Thank you so much. So can you talk a little bit about joint capacity versus non-joint capacity, how that works, pros and cons?
Joint reports?
Oh, yes, joint reports.
Okay. Jason, do you want to kick off?
Yeah, I mean, this was just meant to sort of be an introduction. We're going to talk about joint retainers, sort of our last topic today, but just to sort of keep in mind that, using a CBV in a matrimonial separation, you, a lawyer representing one party, the husband or wife or one spouse, you can retain a CBV for that side, or you can get together with your counterpart on the other side and you can collectively or jointly retain one CBV instead of each retaining a different CBV to prepare reports and prepare critiques and stuff like that. But just to be aware of that as an option or an alternative, and we're going to talk a bit more about that later.
Awesome. Sorry, I don't want to step on your toes. I'm excited by it. I actually have a couple matters right now where we have joint reports being done. So I'm excited to hear your analysis of it. But why don't we go into our second poll? In your experience, how long does it take typically for a CBV to produce a report? Same day, 1 to 3 months, 3 months to a year, between 1 or 2 years, and other. So we'll just wait 1 minute for that to go, and then we'll see the results as we let people in. Wouldn't it be nice if we can get them done in the same day?
Well, funny enough, I'll just jump in here. I was on the phone with someone, this is a tax-related matter, yesterday, and they were trying to decide whether they needed a valuation or not. So we ran through, and in a couple of hours, I told them what the issues were and what I thought the range of value could be, so they could decide whether it made sense to go ahead. So in theory, some analysis can be done, but let's see the answer to those polls.
All right, let's see what our audience thinks. Okay, vast majority, 1 to 3 months. 37% of us think 3 months to a year, 3% between 1 and 2 years, and 10% other. All right, so what is the answer? And of course, there are typical cases and of course, non-typical cases. So just in your typical case, what's our timeline looking like here?
To get a report done, it really depends. But I think most people there were saying the 1 to 3 months. I think that would be most people's experience on average. And that would certainly be my experience on average as well.
And I'll just jump in there and say that ideally should work, but the challenges you get and I think a lot of them were talked about this morning, but things like complexity when there's a lot of different businesses or a web of complex organization structure, but also the ability the ability to disclose and the desire to disclose and be transparent. So sometimes evaluators, you may think it's the evaluator taking a long time, but it may be because often it's because we're sitting waiting and trying to play that disclosure waiting game. And when do we go ahead and make assumptions, or how long do we wait to get disclosure?
Absolutely, I'd agree with that. I mean, if anything's going to hold up the process, it's getting us the information we need. And sometimes that can be a lot more challenging or difficult than you would think.
Yeah.
Yes, well, don't worry. As a family lawyer, I get to hear all about it, because if someone isn't doing a report, I'm calling Melanie to say, okay, who's the problem here and how many motions do I need to bring? So yeah, we understand as lawyers, we get that you obviously cannot produce a report without the source documentation. And sometimes clients are unwilling or unable to produce that for whatever reason.
Yeah, and then I guess another point with that is that sometimes the clients don't understand what's involved, and a great way to kind of let them know right ahead of time that this is like a mini diligence. It's not going to be as if someone was looking to buy the company, there'd be way more diligence, but we still need a fair amount, and so you can't just look at a set of financial statements and say, here's the numbers, but clients often don't understand. They think we have ESP and we can figure it out without anything on paper.
And how many times do you get that client who says, oh, it's all super easy, just call my accountant? And you call the accountant and you say, yeah, this is a mess. They've filed and refiled and done so many structuring.
Or you call the accountant and the accountant says, we're going to have to talk to the client about that.
Yeah, I haven't gotten instructions.
Well, and that's an excellent point that Jason's bringing up, because and Michelle's bringing up, because people, I will say the movement often is to reduce the amount of fees you want to pay to accountants, right? They want to do, whether they want a compilation or maybe just the tax return. And that means that the accountant's doing a lot less work and doesn't have the same, or shouldn't have the same knowledge that someone who does a review or an audit. But then as soon as something goes wrong and they need documentation, it's, oh, the accountant must have ESP, even though we never retain them to do much, but they must know everything about my financial position, which isn't the case.
Yep.
Absolutely. All right. So why don't we talk a little bit about the CICBV and the professional standards? First of all, what is a CICBV?
Yeah, I'll take this one. So the CICBV is really just our governing professional body. It's the Canadian Institute of Chartered Business Valuators, or they like to be known as the CBV Institute now. And I think this is not something we want to go into great detail, but the main takeaway here is just to be aware that when you're retaining a CBV, CBVs must follow the practice standards and the code of ethics of their professional governing body, the CICBV. I mean, these standards and code of ethics are publicly available for anyone to sort of look up and review on the CBV website. And they're really, just like any profession, they're meant to protect the integrity of the profession and serve the public interest with a high standard of like honesty, competence, objectivity, impartiality. So the code of ethics is, as you would think, right? It's maintaining the good reputation, integrity of the profession. It's ensuring independence, avoiding conflicts of interest, ensuring privacy and confidentiality of client information. And then you turn to the practice standards, and these are the standards that CBVs must sort of adhere to when they're doing their work, when they're in the process of preparing a report. So there are practice standards that are sort of set for CBVs to follow regarding report disclosure, the scope of the work, the amount of work that has to be involved in a certain type of report, and how they document their files. And that's for valuation reports, expert reports, and limited critique reports, which we're going to discuss in sort of some detail today.
Excellent. That's really great. We have a question from the audience, and it's a really good one. How often and how likely is a court going to make an adverse assumption when a party does not disclose the required or accurate information? And why don't you guys take this from your perspectives, and I'll also tell you from a legal perspective what I think.
Sure, I'll just jump in here, and I think from the legal perspectives, you guys see this more often than we do, and from a valuator's point of view, we have to sign the expert's acknowledgement. We're supposed to be independent, so we can't just make an adverse inference on our own. Somebody has to tell us, this isn't being disclosed. Can you please make this assumption? Now, that's fine, but we also have to be careful of if there's equally valid assumptions that maybe we need to do scenario analysis. But in that case, I think we're often directed by the lawyer to say, what does this mean? Because this wouldn't be normally what we do in evaluation.
Yeah, and I think, from my perspective, we see this a lot where we're requesting supporting documentation to sort of back up the fact that these expenses are required for business purposes or business nature, and they're not providing it to us, and we're following up, and maybe they're giving us some information, but they're not answering the question or giving us the information we need, and we're following up again, and we're continuing to follow up. And then eventually, counsel advises us, if they're not answering the question, make an assumption and state the assumption in the report. And then the court may draw an adverse inference from that.
Yeah, I fully agree. I actually have a trial coming up, and this is one of the issues where the other party has documentation, is the only person who can provide it and is consistently not providing it. Now, that's a joint retainer, which means that I'm seeing all those correspondence between counsel, and I can use that in my trial. Or if I needed to, if we got to an impasse where we couldn't move forward without the information, I could then go to court, bring a motion, seek my costs, seek an order for whatever I need to, or seek an order that the valuation not go ahead, or that an adverse inference be taken, and that the valuator be directed to take that adverse inference as a result of this motion. So yeah, we see it all the time. And obviously, if you're in court because you're not providing disclosure, it's never a good sign for you, for the party not doing the providing. All right. Why don't we move on to our next topic, which is types of report mandates for the CBV. And Melanie, I'll ask you to get on this one, please.
Sure. So as Jason mentioned, we have practice standards. We actually have 6 sets of them for CBV. So some of them are more commonly used in family law than others. So standard one that most of you, those who have seen valuation reports, have probably seen the 100 series, the 110, which is a valuation report. There's also a 310, which Jason referred to, which is called expert reports. And that would be things like tracing reports, income analysis, anything that's not a valuation per se. The 410 series, 400 series is limited critiques, which we have, I can provide some, I'll hold back on my comments on those, but the usefulness, I think, is very questionable, but they do exist. So those are the written reports, and those are, as Jason mentioned, that the CBV Institute has this box around what we're supposed to include. Now, it's obviously still judgmental what goes into a report, and we're not, it doesn't mean you can only put these things in. You can put more in, and whatever you think is useful. That's the guiding principle, is what's useful for the reader. But there are certain minimum things that have to absolutely be in there. But then there's also referred to, I think this morning's session talked about it, I think Russell mentioned it, verbal or oral reports, which aren't subject, there's no standard in the CBV handbook that says this is what an oral report is. It just says if you are doing something in writing, even by email, regardless, then it has to follow these standards. So out of default, an oral report means that you are not following the standards, but it can't be anywhere in writing. So Jason, you want to fill in a few more on?
Yeah, no, that's really a good summary. I mean, we're going to go into some detail about the different types of reports, but this section on, what sort of mandates could you use a CBV for? Well, it's business valuations, it's income assessments, and any type of an expert report in a matrimonial setting can include like a lifestyle spending analysis or a tracing analysis, that type of thing.
Right. And one thing just to add on the business, although we talk about business, that can be expanded to sometimes even liabilities, right? Like the contingent tax liabilities would be considered to be a valuation
Yeah.
analysis as well.
Yeah.
And depending on the, on the equalization, there may be big contingent liabilities, and it may be very helpful to have that, because you don't want to go to a trial and for the first time be arguing over what those contingent liabilities should and shouldn't be. The court's going to look at you and say, why are you wasting my time? Why haven't we had this report done well before now? All right.
Yeah, and even though the CBV is sort of a specialist or a specialty area within matrimonial, like you may need, it can become quite complex. You may need a CBV to do a valuation of a business or a number of businesses at both the separation date and the marriage date. And you may also need them to sort of identify and highlight amounts due to or from, like shareholder loans and advances, as well as the contingent disposition costs and taxes, which is the liability. Like there can be quite a number of things that you rely on a CBV for.
Absolutely. We always, as soon as we see a business, we always call you guys, but also there are times when there are multiple businesses, right? There are sister corporations and money's moving back and forth. And just for the lawyers to fully understand and for the court to fully understand what is going on here and how we've come to the conclusions we have.
Right. And just to add one more thing on that, like, and Jason mentioned the marriage date, separation date, there may also be a current date issue if it's a joint family enterprise. There may also be the fun part for the valuators is if there's a disputed separation date too. So we even get to do more valuations. So we love that. But the clients, when you start talking about costs and time, that's where things start increasing significantly.
Yep.
Absolutely. Are there anything special with stock option valuations that we should know about as lawyers?
Do you want me to take that, Jason?
Yeah, you can comment. I can provide some comments as well. Yeah.
Sure. I guess it's nothing special about it. Would still have to follow CBV standards, but it's maybe a bit of a different reference point from the value. So when we do, the family law talks about value. So that's open to whatever the interpretation is.
Yeah.
If you engage a valuator, we don't necessarily know what the right value is. So we typically default the fair market value, which is the initial value term that came up from tax rules back in 1971. But from a stock option, the challenge is that they're often not transferable. Yeah. So if you look at fair market value, that means someone else would buy it. So you might use a different term, or value to owner.
Yeah.
What's it worth to the person who holds it? No one else will pay for it because they can't own it.
Yeah, I agree with that. And then, there's sort of different approaches or methodologies for valuing options as opposed to a business. Like typically you're looking at an option pricing model like the Black-Scholes or something to use in valuing a stock option. And so then there's a number of different inputs and assumptions you have to gather in order to do that valuation. And one of the inputs happens to be the value of the company, the stock price. So if you're looking at stock options in a private company, then you've got to have a value for the company, right? So it's a lot easier if it's a publicly traded company, but those are some of the nuances.
Yeah. Valuator's dream. More complexities. We love more complexities.
I'm not asking at all from a selfish point of view. I don't. Don't worry, we can chat after this. So in terms of income assessments, especially because as family lawyers, we're looking at this often for support purposes, is there anything there that is important for us as family lawyers to know about?
Can I go ahead, Jason?
Yeah, I can. So income assessments, it's an expert report, right? So it's not a valuation report. And I think you really need to have a good understanding of the federal child support guidelines. We're going to talk briefly about this today with an income assessment under expert reports, but you have to have an understanding of the federal child support guidelines. And you really have to have a good understanding of them when there's a business involved, because it's not just as simple as taking the individual's tax return that they file with CRA, and that's the income for support purposes. There's a number of other potential perks and benefits that the business owner derives from the business that have to be looked at or taken into consideration in coming up with one's income that's available for support purposes. So,
And I guess just to add on to that is another issue for the lawyers to consider and the valuators is this general concept of double dipping or double counting, right? So options are a great example of that. So we may value them, and then an easy one school of thought might be, well, hold on, you valued it, so why does it come into your income later on? And there's a lot of ways to deal with it, and often, in that you might do valuators might do different scenarios and say, if you want to take this position here, if you want to take this position, because it's not clear cut how you would deal with that between the equalization and the income.
Yeah, I can tell you from a lawyer, it's so helpful when you have an expert who has that understanding of the federal child support guidelines, because they are their own beast, right?
Right.
And a lot of times, if I have clients who are business owners, they'll say, hey, why can't I deduct $3,000 in meals and entertainment? And, I'm allowed to do it. The thing we always hear, if the CRA allows me to do it, why isn't the judge allowing me to do it? And I said, well, it's not quite the judge. It's a little bit more of the law. So it's really helpful when you have an expert who can sit that person down and give, a high level piece of advice. It's even more helpful when your client is not the business owner and is struggling to understand these big concepts of, what are add backs, what's double dipping, how, I've just always known that he makes A. Now you're saying he or she makes B. How do we deal with this? So
yeah, good point. Sometimes it's an education is more of what the client needs, one client or the other, than anything else.
Yeah. And I always find that once you have a valuator who has that expertise, it's so helpful, because once you get past the education piece, sometimes it really reduces the issues, right? If you can say, look, this is likely what a judge is going to say anyway, we can fight it, but we have your valuator who's giving you this number, you're going to be hard pressed to find a judge who's going to go outside of that. It really pushes things towards a settlement. So I know, and of course we know now, that all reports have to be provided within 6 days of a settlement conference. So there is this push by the judiciary to get these reports done early, so that we can have more settlement focused discussions and we can move things away from trials and into settlement positions. So yeah, I personally find that really helpful. Okay, so what is a lifestyle spending analysis?
Jason, do you want me to take that?
sure.
So lifestyle spending analysis. So, and I've come in some of my reports now, I'll do an income analysis based on, we'll talk more about what goes into it, but then I may say I haven't been retained to do a lifestyle analysis. And the lifestyle analysis, I see it just as a bolstering of the income analysis. So if someone on their tax return is showing $40,000, I know that's, or 20,000 or 50, I know no one's ever had clients like that before, but then they happen to have their kids go to private school, and they happen to be driving a Ferrari, and they have a house up in like 10,000 or 8,000 square foot home that has very little mortgage, you kind of go, well, hold on, what's going on here? Now, it's very possible that all of this is funded by debt, not likely, but funded elsewhere. But that is the open question. So that lifestyle analysis just says, if the person is living like they're making 200 or whatever thousand a year, but their tax returns say this, what are we missing in between? Is it debt? Is it mommy and daddy? Is there trust? Is there other source of income? Is there cash, unreported cash in the business? What's going on? So it helps the intention is to plug the holes and get that bridge to the income report.
Absolutely. And again, I think that's a really great education piece, because, maybe those properties or whatever it is are owned by the business, and you can explain, okay, this is not going to be an income piece. This is going to be more of the equalization, what's already included in the value of the business. So, And it's really helpful for lawyers so that, you know, we already have someone who's sitting there, who's done all the research, who can give us the Coles Notes of, hey, here's what, you know, here's kind of how it works, so that I can now also explain that to my client and show them the different options and, you know, settlement positions that we can take.
Yeah, and just to add to that with the lifestyle spending analysis, like we don't do them very frequently because they tend to be very forensically driven. Like it's a matter of a lot of detailed work, looking through bank account statements and credit card statements, trying to isolate spending for personal versus business and come up with that picture of the overall spending for the household, right? It often comes up in situations where one spouse thinks the other spouse who runs the business is taking a lot of cash and not reporting the income. So of course, you know, that's when it's going to be relevant, but it can be very time consuming and costly to do that. So sometimes, you know, we will suggest that maybe start with just 1 year and let's see what we come up with. And if we need to do more, then we'll expand it from there. But sometimes clients shy away when they find out the amount of work that's involved.
Yeah, that's a great point, and I think that's a great suggestion. Like the 1 year, I'll do the same. I'm finding these are coming up more and more, but I do have to say, when we've done them in the past, we've often found very interesting things. So, you know, you don't know until you do it, but as Jason said, they're time consuming, expensive. You probably don't need a senior evaluator doing them, supervising. They should be supervising them, but still they're very they definitely are time, especially when there's more than one credit card statement, more than one bank account.
Yeah, and often I have to speak to my clients, you know, on whichever end, to explain that they can have a big impact on support and, you know, going forward, especially in long-term relationships or long-term marriages, where you're looking at 20 or 30 years and there's a large spousal support component to this. Having that lifestyle spending analysis to determine what the true income should be for support purposes is really helpful. And let me tell you, judges love them because they don't want to be sitting there saying, you know, hey, look at his credit card statements. He says he makes $40,000 a year, but he spent $200,000 on his credit card. How could that possibly be? All right. So would you mind if we move forward with a tracing analysis and how that works, and even what that is, maybe to start?
Yeah, I could just sort of mention briefly, we don't do these very often. They are sort of reserved for certain situations, but we've done them a couple of times where, you know, a party says that I have an inheritance or a gift back from a number of years ago, and we need to sort of go back and trace where the funds went and where they originated, right? So it can be very complex if the money's been moved around in following the money, and it's just a matter of looking at sort of the bank statements and doing that sort of tracing and then putting it into a concise, easy to read report.
I'll say a tracing report can also come up if, like, let's say you're going through bank statements and you find money is going somewhere else or money is coming from somewhere else. So, and whether then you need to get a forensic person, which we have, and get further information, because it may involve third parties and trying to find out where the accounts are. That may come up from time to time, but not as often as something like lifestyle or the other tracing.
Yeah. But it is important, especially in my view, when they're very large inheritances and they know there has been movement, and there will be, especially in longer term relationships where, you know, 20 or 30 years, it'll be, I think it's important for my client to be able to show and demonstrate to the court and to a judge, yes, this is an excluded amount. Because the worst thing you want is to go to a trial, assume that, you know, the judge is going to agree with you that this $1 million inheritance should be excluded. And then all of a sudden they're saying, wait a second, we have some issues with the tracing of this. So definitely in situations where there is a lot of money at stake, it is worth every penny to get it done. Now, this is an interesting one because I'm doing a bunch of these right now. What about, tell me a little bit about reviewing and critiquing the opposing party's expert report.
Do you want me to go, Jason, or?
Sure,
Okay,
sure.
So as Jason mentioned, we've got like the the 400 series is a limited critique report. But that's a pretty limited scope. In theory, it's just you look at someone else's report and you comment on it, but you don't provide a conclusion. So I don't know if anyone's had experience with those, but I think in my personal opinion is they're pretty useless. Because they do not provide opinions. And regardless, when you're doing a matter that's involving family law, someone is paying you and wants your opinion. But if you're instead going to say, well, I'm not sure, I don't think I agree with this multiple or this, but I can't tell you what my opinion is because I wasn't retained to do it. It's not that helpful. So on a standalone basis, they're not that useful. So I think in cases when you really have issues that are judgmental issues and valuation or income issues between experts, then both experts probably are going to be doing reports. And then they may, limited critique, who cares about a limited critique? You're just commenting on, well, Jason's multiple, I think, was too low because of this. I agreed with these other things he did, but I just have a problem with this and this. And then, of course, we haven't even talked about hot tubbing, but over to Jason.
Yeah, no, I'd agree with all that. Like, this is a limited critique report. It's limited in use, and that's part of the name, right? Like, that is the problem. You provide comments on another report, but you don't give a solution. You don't give a recommendation. You don't give a conclusion. So I mean, perhaps it could help with narrowing the issues. Perhaps it could help with early settlement negotiations. Perhaps it could be useful for cross-examination of opposing expert. But I find anytime I'm asked to do a limited critique report, the next step is, after I provide that report, is, well, what do you think it should be? And then I have to do my own report anyways.
And I've gone to, I don't know if you have, Jason, but I've gone to court, this doesn't happen very often, where the other party has done a limited critique on my report. And it's really, lawyers out there, do not go to court when your expert has only done a limited critique. The judge is just going to say, I don't know what to do with this because it's not an opinion. So we have an opinion. Someone is saying they may not agree, but we really don't know if they agree or don't agree overall. So it's a really bad thing to do. So as Jason said, maybe from a settlement point of view, maybe not. I think they're I tell people they're pretty well useless. They used to be, when they first came out, people, I will say, in my experience, they weren't well understood. So they were more effective because people were worried about, oh, well, this must be wrong. But I think now most people understand what they are, especially the courts, and they don't generally get you that far.
Thanks so much. I know it's not on our list, but what is hot tubbing? You said it, and now I'm interested.
I don't have a hot tub at home, but I don't know. Jason, do you have one?
I do have one, but I don't like that term, right? They gotta change that.
No,
they gotta change that term. Yeah, it's really, I mean, the courts and judges are really trying to encourage, and in some cases sort of mandate, that before things come to court, they want the experts to sort of get together and discuss their differences, discuss where they agree, discuss where they disagree, discuss why they disagree, and come to court only with a list of where they disagree and the reasons why. So, I mean, the hot tubbing is meant for experts to sort of discuss each of their reports, discuss the issues, and see if there's any chance of movement or compromise to try to, in an effort to settle before going to court.
Yeah. And they can be very useful, I think. And sometimes you get personal dynamics in there, but from a 10,000 foot view, they're good because it helps out the court to say that these are the real issues, right? That helps the court filter. These are like insignificant. Like, we're arguing about $10,000. Let's just cut in the middle. Now, this is a big issue. And I've done some of them before where what we ended up doing is saying, well, these are legal issues, and let's agree. So we would agree that if the court finds this, this is the value, this is the income, whatever it is. If they find something else, we both agree. So now let's, let the lawyers do their arguing. And then once there's a determination, they can pick one or the other because we've already agreed. So I think they can be very useful. What I've seen lately, I don't know if Jason has seen this, the mandating and judges noting the experts did not do this, or they didn't come to an agreement, and it's like, oh, we're in trouble now. So they're really pushing the experts on this, in my experience.
Yeah, I agree. I agree with that. And you know, years ago, a few years ago or more, we were asked to do it, and I found that the success rate was very low. And I don't know if it was just because I was opposite another expert who was sort of dug into their position. Like, you
Not
really need
me,
to keep
though.
an open
Not
mind.
me.
No, 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 no,
No.
of course not.
Just to be clear, we
But
would be able to resolve it.
of course. Um, but what I'm finding is the trend is shifting. Like, I'm finding more experts are being more open to not being emotional and being more open to, okay, this is just an exercise we have to go through, and all we're doing is summarizing the differences and presenting our arguments or reasons. And if this is new information to you, maybe you'll consider changing your opinion. If not, then we're just going to highlight that issue and what the two different reasons are. And it seems to be going a lot better.
Yeah, I'd agree with that.
That's great. And the thing is, trial time is so difficult to get. Like, our judicial system is so bogged down. The cost of trials are so expensive. So if you could have the experts come with a united list of issues that they don't agree upon, and maybe there are legal decisions that have to be made before they can choose a path, that would really reduce the trial time. And it's a great way to sell it to your client. If I can reduce a whole day in court, that's going to save you much more money than a couple of hours of the experts sitting down and kind of hashing it out. So I hadn't heard the term hot tubbing before, but I understand the concept of it, and we do use it a lot.
I think sometimes in the order they're trying not to say hot tub. They're trying to use a different term because everyone knows it. They go like this when they hear tubbing.
All right, why don't we go to our next poll? So what do you expect a business valuation report to cost? And this is so funny because I get this question. It's the very first question every single family lawyer gets is, how much is this going to cost me? So 5 grand, 10 grand, 25 grand, 100 grand. It depends. Every lawyer's favorite answer and other. So we'll give everyone. But have you guys, isn't that the first question that people ask you? How much is this going to cost me?
They always want to know.
Yeah.
Timing and cost.
Mm-hmm. It's always, and I'm sorry, half of those questions are probably from lawyers. I apologize.
Yeah, it's probably you guys sick clients on us to ask.
Yes, but it's our clients, it's not us. We know it takes what it takes.
Fair.
You may go in thinking the scope is this big, and then as things happen, it gets bigger and bigger. So let's see what our audience thinks about this. All right. It depends. You've got a room full of lawyers when that is the overwhelming answer. 59%, 27% of us think it's about 10,000, 7% of us think it's about 5, the 5% at 25, and 1% thinks it's 100,000. Oh, and we've got another. So why don't you guys educate us?
Yeah, I would say, I think you got, not only because you're lawyers, but I think you got the right answer, right? That was, it depends. And it depends. We talked a little bit about some of the reasons why things can change, disclosure, challenges, regardless of the source, but disclosure challenges, but complexity, but also, income analysis. How many years are you covering? If you're doing a retro claim and looking for go forward, then I've got one now where they want me to go back to 2015. It's like, guys, I'm happy to do that, but forgetting about whether we can get the documents, think about how much money this is going to cost. It's got to make sense relative.
Thanks.
I agree with that. It totally depends, but I think the next most popular response was 10,000. And I mean, if you're just talking about a single business, a single operating company, maybe 1, maybe 2 valuation dates, it's not overly complex, that might be in the ballpark there.
Yeah.
Thanks, team. I just want to do a really quick question. So if you've had one CBV do a business valuation, can you have a different one do an income assessment, or is it better to go back to the original CBV? I know my answer, but I'd love to hear what you guys think.
I would say if you've got the advantage, unless you've had an issue with the valuator, that valuator's done one piece of it, has the knowledge of the client, has the knowledge of the business. So they should be able to do a better job, a faster job. I don't see on the surface why there'd be any advantage to going to another one unless you had an issue with the valuator. You know, Jason, any?
Yeah, no, I agree with that. Like I hardly ever see two separate valuators doing separate. One does the business valuation, one does the income assessment. It just makes more sense. Oftentimes we're engaged to do both at the same time, like because we're gathering similar types of documents and information. So
Yeah, the only time I've ever not used them both at the same time is where something happens and that valuator is not, let's say we do the business first and then decide we need to do an income later. Something happens and that valuator is just not available or doesn't have the right timeline, or unfortunately is off on a medical leave. But that has happened once, I think, ever in my 14 years of doing this. So my advice to my clients is always do them both, do them early, because the more information we have, the earlier we have it, the easier it is to resolve this matter instead of going to a trial. Okay, so why don't we talk a little bit about types of CBV reports and, the process, the usefulness, appropriateness, and potentially the cost. Jason, I know you started talking a little bit about 10K being a business valuation, but we're lawyers. We want to get as much information as we can out of you guys today.
yeah, we've talked about a lot of this already. So I mean, I won't spend too long, but when we're talking about written reports, I guess one of the things we didn't talk about, because we've talked about valuation reports and expert reports, the different types of expert reports and limited critique reports, but we haven't drilled down a bit on the valuation reports. When a CBV does a business valuation report, there are three different types or levels of valuation reports that they can provide in accordance with the standards or professional standards. And that's a calculation, an estimate, or a comprehensive. And they vary in terms of the scope of review or the amount of work that's done, the disclosure in the report, the cost, and the level of assurance that's provided over the conclusion. So just like, for example, a comprehensive is based on a very comprehensive review and analysis of the business, the industry, all of the factors, right? It's a very detailed report. And in my experience, it's not very common. And typically for larger companies, significant dollars at stake, it could be litigation, it could be maybe the public is going to be a user or reader of the report. I mean, we have one going on right now, but this is only one that we've had in the year. And it involves a going private transaction for a large public company, like $300 to $400 million value. Like that's a comprehensive. They're not very common though. The estimate is based on a more limited review, analysis, and corroboration of sort of the information in the report. And that's useful for litigation, certain contentious issues that require deeper review, investigation. The lowest level is the calculation, and that's based on a minimal review and analysis and almost no corroboration of sort of information. It's a very brief report. They can be useful, and they are quite common for, planning purposes, tax planning, estate planning, or early stage negotiations, or you want to get an idea of what the value is, because in a calculation, the CBV still needs to assess all of the different factors that affect value. It's just they're not digging deep to independently corroborate or verify every single assumption. So you're still going to get a good ballpark value, and it's less work and it's cheaper. So I don't know, Melanie, any other comments on the different types of
that's
reports?
Great summary. The only thing I want to just be really clear about this is, regardless if the financial statements are audited, financial statements are reviewed, the financial statements are compiled, the financial statements are just prepared internally, we can do, theoretically, valuators could do any level. So just because the financial statements aren't audited doesn't mean we can't do a comprehensive. So I think there's a bit of a misunderstanding that people think if you do a comprehensive, that means we're also going to be auditing those underlying financial statements that are only compiled. That's not the case. That would be it's not unusual that we'll be engaged to do certain forensic or detailed procedures on the underlying statements if they're not audited or reviewed, but that's separate from the valuation in theory, right? Doesn't mean
Yeah.
during evaluation we're not going to say we're concerned this account doesn't make sense, that account doesn't make sense. But if we didn't think that, then we could still, in theory, do any level of assurance.
Yeah, the only thing I would add to that is it's up to the evaluator's judgment in terms of, is there enough good quality information available to allow me to do a comprehensive review and provide my opinion? Because they may want you to do that, but you may say, well, your records are horrible and I can't rely on anything you're telling me you're giving me. So I'm I don't feel equipped to be able to do a comprehensive.
Yeah, I agree. I think though, you'd still have that issue of if you have no comfort in those statements for a comprehensive, I'd have no comfort in an estimate or a calculation in theory, right? Because
Yeah.
it's garbage in, garbage out, regardless of
Totally.
what level you're doing. So that's and the movement over the last number of decades has been downgrading external public accountants' involvement with financial statements and the assurance provided, because people just sort of cheaped out along the way unless someone demands that they do it. So that's the bane of, I don't know about Jason, but I suspect I know one of the bane of my existence is the unreliability and questionable reliability of the underlying financial information that we get.
Yeah, and sometimes what you're hearing from the client or the accountant doesn't necessarily jive with what you're seeing in the records, and that gives you less confidence over what you're being told too.
Right.
All right,
Yeah.
guys.
So I just wanted to. Oh, you're going to do another poll. Okay.
Sorry.
No.
Okay, we're going. Sorry, we're
Yeah.
close to the end. Sorry.
I apologize. Okay. CBV reports. Have you jointly retained an expert with opposing counsel? Yes, no. What's a joint retainer and other? So hopefully by now we know what a joint retainer is. But while the audience is answering that, I just have some quick questions for you. Someone asked, it sounds like a limited critique would be helpful to decide if getting a full report would be useful. What are your thoughts on that?
Go ahead.
Yeah. I mean, that's a good start, but I would even say, if you've been served with an opposing expert report, you don't necessarily have to start by retaining a evaluator to do a limited critique report. Like, just retain the evaluator to review the report and verbally give you their thoughts and issues and concerns, because maybe they think it's okay, or maybe they have identified a number of issues that would warrant preparing a report.
Yeah, totally agree. That's the best, most efficient way. You retain the expert for a few hours or whatever it is, and then you go to step 2 if needed, but maybe you don't need to.
Thanks, that's great. And so cost savings. Okay, let's see the results of our poll. All right, yes, no,
Okay.
a couple of what's a joint retainer. So that's great. I mean, it's good that we are using these. If you haven't used them before, don't be scared. You can call Jason and Melanie. They're wonderful, and they'll answer some super professional questions about the process if you need to. If you're looking at getting something like this, and if it's worth it, and you guys are both so practical, which I love about you. I know that you would give someone really good advice as to what that step is, and to also look at your options. Right? This is what I think would be best in this situation.
Right.
Okay. So why don't we move on to our last topic, joint retainers with CBVs, and the discussion of pros and cons.
Yeah. Do you want me to start, Melanie?
Sure, go ahead.
I mean, a joint retainer is simply where the parties agree to both retain one expert jointly instead of each retaining their own expert. This could be a court-appointed joint retainer, or it could be just a voluntary joint retainer. And I mean, on the surface, you would think that there's a major benefit in terms of cost savings, because now the parties are splitting the fee for one expert as opposed to each paying for a separate expert. However, in my experience, I don't know about Melanie, but in my experience, that's not always the case. So I just wanted to sort of give you a couple of pointers as to, when they may be appropriate and they may work and when they sort of don't work. Like, I think when they work and when they're effective, in my experience, is if you've got sort of a collaborative setting where the parties sort of are open and honest and forthcoming and their goals and interest driven. They're not positional, and they're willing to consider options and willing to compromise. It's not like a win-lose mentality. Those situations, a joint retainer can be very effective. But when they don't work, and unfortunately I've been involved in a number of these, is when the parties are highly litigious, highly adversarial, highly emotional, and irrational. And so why don't they work in those situations? Because the parties are ultimately going to disagree with each other on a number of issues, key issues. It could be anything, personal expenses, unreported income, but they're going to disagree with each other, and they're going to tend to dig in on their position, and they're going to request the valuator to continue to investigate until they get their way. It's going to turn into a detailed forensic exercise. It's going to be very expensive. It's going to be very time consuming. Ultimately, the parties probably will never be satisfied. They're not going to sign the rep letter the CBV wants them to sign, and they won't be able to get a final report. I don't know, Melanie, have you had any of those situations?
Oh yeah,
I'd like to be able to identify those and then avoid them.
Yeah, when everyone started doing joint reports, naive Melanie thought, oh my God, this is great. This is brilliant. The world is going to start working better. But I've learned a lot. And one of those things is making sure you put parameters. If you do think is going to work, then put parameters in there. So just as Jason said, so you don't want someone to be able to hold up a report just because they don't like the result. So I always put in my engagement letter certain parameters. Well, we'll do a draft, and then within a certain period of time, the parties respond. Then we may, we will decide whether we do another draft, whether we reflect those comments or don't. And then if we do another draft, they have a certain amount of time. And then after that, we're done. We do a final report and nobody can stop it. So you got to be very careful with that, because someone can drag their heels. And it is certainly a huge issue for the CBV profession, because I'm on a subcommittee or a committee at the CICBV that is dealing with joint retainers, and we're trying to come up with best practices and things like what go in engagement letters. How do you make sure you deal with the clients and such like? So it is certainly, Jason's experiences are certainly very common.
Yeah, and just a couple of final points on this to keep in mind when there's a joint retainer of a CBV. Once that CBV is jointly retained, it's not like one side can then later in the process just unilaterally say, well, now I want to hire you to do this. No, there's going to be a conflict there. You're going to need the approval of both parties for that to happen. And also to keep in mind, when it's a joint retainer, there needs to be transparency throughout the process. Like, all parties need to be copied on all document disclosure and all communications with the CBV. So you can get yourself into trouble if you don't adhere to that.
Yeah. And I guess that's another good point about, because I've seen a lot of joint retainers where someone says, well, okay, I'll agree with the valuation, but I really think that they're hiding stuff. And no, we weren't retained to do that beginning. So then they want you to do, okay, you've done your income analysis, but you haven't done so what are we doing now? So to try to set out what the mandate is and anticipate that up front, so you don't have those issues that linger and you never get to resolution.
All right, guys, you've been so generous with your time. I know we've been peppering you with questions. I know we're over the time, but I'm going to ask you one or two more if you don't mind. So here's one question. When completing a limited critique report, do you get the source documentation, or do you just see the report itself?
I think that totally depends. And this, I'm assuming, or Pat, the question can also be if you're retained to review someone else's report, not necessarily do that. Sometimes yes, sometimes no. Sometimes you just need to look at the report. Sometimes you go, well, I'm not sure how the other expert came up with this or that. Can you send me off this? So I think it depends on the situation. Jason, I don't know.
Yeah, I know. I'd agree with that. Like, I mean, what is it that you want me to do? Do you want me to just review the report and give you my thoughts as to whether I think there's any issues or concerns here? Or do you want me to actually check the accuracy of the report to the source documents and to go to that level? And they may not want you to do that initially, but maybe after you've gone through and identified some issues and they want you to prepare a report, well, at that point, I'm probably going to ask for the scope documents, because as part of my exercise of preparing the report, I'm going to want to see the documents that they relied on in preparing their report.
Yeah, that makes complete sense. Okay, one last one, because it's a good one. What are some of the biggest issues you see in other expert reports?
Well, okay, so I'm going to just plug my book here that I co-wrote with Dr. Howard Johnson, called Understanding Business Valuation Reports from Reuters. So if Thomson Reuters, if anyone's interested, but it was aimed at the at legal reports. And I'm sure Jason has a lot of these too. I think one of the most common one is a lack of clarity, or a lack of disclosure is how someone came up with something, or what assumption, or what methodology, or like when I tried, and it doesn't mean I always do this, but when I prepare my reports, I try to visualize someone else reading them and saying, are they going to understand how I came up with this number? Assuming that they're reasonably intelligent, they understand valuation, so they've got some knowledge. Are they going to say, how did she come up with this multiple, or how did she come up with this number? I want them to be able to. They may not agree with me, but at least they can say, I agree or I don't agree. I know, Jason,
Yeah, I agree with that. That is sometimes an issue. You just don't quite understand. They haven't given enough support or rationale in the report. But another common sort of issue I see is that they really didn't do enough work, and they just accepted what their client told them. Like,
Yeah.
I see that very commonly, relied on discussions with management. Well, I want to dig into that and support the reasonableness of that. That may not be reasonable. That may not be the situation. So that's another sort of a common issue I see.
Yeah, that goes back to things like, if you're doing a calculation report, then in theory, that's what
Yeah.
you're doing. But is
Yeah.
that really appropriate to begin with? Should that other expert have really agreed to that in the situation, knowing it's
Yeah.
going to be a contentious matter?
Another common one is just taking unreasonable assumptions, unreasonable positions on, the allowance for personal expense adjustments and stuff like that, or unreasonable positions on an economic salary, whatever assumption, it really should be reasonable and supportable. And a lot of times I see that's not the case.
Well, thank you both. This has been so wonderful. I've taken lots of notes. I have questions for you both that I may call you about later. We really, really appreciate you taking the time and answering all those questions throughout. We're sorry, there were so many that came in. We tried to get to as many as we could. So it just shows you that there's such a need for us as professionals to have you guys come and speak to us. And so we really, really thank you for taking the time today.
Absolutely. You're welcome. And anyone can reach out to us at any time if they have any questions that weren't answered today.
Thank you so much, Melanie and Jason. Thanks,
Great.
Michelle.
See ya.